Welcome to the fourth episode of the complete learning series of stock market investing and trading. As always, I've put all these videos into a single playlist. The playlist is available here in the I button. Make sure you watch all the videos in the right order. Learn really well. Let's trade together. Let's grow together. So you've seen the first video. Now you know what the stock market does. You also know how the stock market works and all the basic things around stock market. Now if you know that really well, the next thing to know is what Nifty is and what Sensex is. I'm sure you would have heard these terms a lot of times in your life, even in your upbringing, or if you're watching a news channel, or even if you're watching YouTube channels, they always talk about Nifty and Sensex.
Sensex and Nifty points.
Sensex closed with a cut off. Nifty was up 100.
Whatever happens in the stock market, they say that, oh, Nifty is up 200 points, or Sensex is down 500 or 1000 points. So everything in the stock market, wherever you go, you hear about Nifty and Sensex. So our next agenda is to understand what Nifty and Sensex is. So it's very clear. So as always, before getting into a video, we always mention the table of contents in the video, right? So in order to understand Nifty and Sensex, the number one thing to do is to understand more about the two different stock markets in India, the NSE and BSE. We'll be doing that. After that, we should understand what an index is. Okay, so before getting into the video, I'll give you some more clarity. When we say Nifty and Sensex, both of them are indices, and indices is the plural of index. So Nifty is an index, Sensex is also an index. So the second thing to do in the video is to understand what an index is. The next agenda is to understand why do we even need an index in the stock market. Then we would go ahead and understand what Nifty and what Sensex is. Then we'll understand what is the use of Nifty and Sensex, and finally we'll also talk about sectoral indices. So these are the agenda of the video. So as always, before getting into the video, if you are someone in the market who has a basic understanding about the stock market but still not able to make profits in the market, consistent profits in the market, make sure that so back to the classroom, let's start learning. Before we start learning, make sure that you go into the comment section and mark your attendance for this session. That is a tradition that we follow here, right? Okay, if you've done that, let's start learning. So in today's video, as I said, we are going to learn what Nifty 50 is and what Sensex is. And to understand that, we have to understand what index is. We also have to understand the two stock markets in India. So I also hope that you watched the previous video where we have already learned about what the stock market does and the two stock markets in India, NSE and BSE. So if you have not watched the video, make sure you watch the video. It's here in the I button. Please do watch the video and then come into this video. So in that video, we've already discussed stock market is a place where shares of publicly listed companies are traded. We have learned that. We also learned that there are two different stock markets in India. One is NSE, National Stock Exchange, and then we have BSE, Bombay Stock Exchange. We have learned that. We have also learned that there used to be multiple stock exchanges or stock markets in India, but as of now, only these two remain. So both of them are based out of Mumbai. Speaking about NSE, NSE started in 1992. BSE started way back in 1875. Now one major differentiator here is NSE has 2000 companies listed in it, whereas BSE has 5000 companies listed in it. Now in order to understand more about this, okay, these are two different stock markets in India. One has 2000 companies and the other has 5000 companies. Now a simple question can be, why 2000 companies only in NSE and why 5000 companies in BSE? Now you have to understand that BSE is a way older stock exchange, and for that reason all the initial companies in India, they used to be listed only in BSE. But now if you look at it, all the companies which are going public by doing their IPO, all of today's companies get listed both in NSE and BSE. So NSE is fairly newer. That's why it has lesser companies. So I hope you get the point. Today, when a company wants to go public in India, they can either be public or do their IPO in NSE or BSE. But most of the companies do their IPO in both and they get listed in both the exchanges. And if you also talk about all the top companies in India today, any company that you know in India, almost all of them are listed in both NSE and BSE. I hope you have a basic understanding about the two different stock markets in India. Now, if you understand that, our next agenda is to understand what an index is. Okay, we are going to understand what an index. Now, in order to understand what an index is, I'm quickly going to give its literal definition, but more importantly, I'm going to give you an example with which I'm sure you'll absolutely understand what an index is. But looking at the term index, it seems to be a bit complex, right? Do not worry at all. It is a very, very simple thing. So here goes the literal definition. Index is a number which measures something, or index is a number which indicates something. It is as simple as that. So index is just a number. By looking at that number, we should be able to measure something. Or index is a number. By looking at that number, we should get an indication about something. Getting a hang of it? I'll give you the example, then I'm sure you'll understand this. Now, this is an example which I've already taken in the previous video where we have talked about benchmarks. If you haven't watched the video, super important video. I'm giving the video's link here. Make sure that you watch the video. In that video, we've taken an example of how do we judge a batsman. Okay, I'm asking the question to you again. How do you judge a batsman? Now let's take an example of Virat Kohli. How do we say that Virat Kohli is a good batsman? How? One way of doing it, we can open Virat Kohli's entire career. We can look into each of his innings, how much runs he made, and we can sum it up, look at it, and we can say that, okay, a lot of innings he's making really good scores. So probably we can say that he's a good batsman. Now, do you think this is an efficient way of doing it? Now, for Virat Kohli, probably he has played 300 matches. So 300 scores we have to look and understand and then judge his performance, then measure his performance, then it would be an indicator of his performance. It's a difficult thing to do, right? Then what can we look into? You tell me. What is that one single number that we can look into of Virat Kohli which will tell us that he's a good batsman? Batting average, right? Now, batting average, Virat Kohli's, I guess, is above 50. Now, if you look at its batting average of 50, it says that. Now, that is a single number which is a measure of his good performance. Now, that is a single number which indicates that he is a good batsman. I hope you're getting it. Now, when it comes to T20 cricket, say someone's strike rate is 200. Now, that is a single number which indicates that he is an explosive and a good T20 batsman. I hope you're getting this. So, let's recollect this again. Index is a single number which indicates something, or a single number which is a measure of something. I hope this is super clear for you. Now that you understand what an index is, the next question in your mind will be, why do we need an index in the world of stock market? Correct? That is what we are going to discuss next. So in order to understand this, we have to understand one need first, which is a country needs to understand the performance of its economy. Correct? A country, the companies in it, its politicians, the government, the common people, everybody, we need to understand the performance of the economy. Correct. Now, in order to understand the performance of the economy of a country, there are multiple numbers available out there, out of which one is the performance of the stock market. Correct. Which is, you should understand this also, if the economy does well of a country, the stock market will go up. If the economy is doing bad, the stock market will go down. That is, there is such a correlation between the economy of a country and the stock market's performance of that country. So now we just learned that it is a need to understand the performance of an economy. We also learned that the performance of an economy can be understood by the performance of a stock market. So the next question is, how do we understand the performance of the stock markets? How do we understand if the stock market is doing well or if the stock market is doing bad? It is very important to understand, right? If the stock market of a country is doing well or bad, it is really, really important, and that is what we have to do. Now, question to you again, just like I asked, how can we know the performance of Virat Kohli? I'm asking you, how can we understand the performance of the stock market in a country? How can we understand if NSE is doing well? How can we understand if BSE is doing well? How can we do that? So we just said that, we just learned that there are 2,000 companies in NSE and there are 5,000 companies in BSE. So in order to understand if NSE is doing well, you can go into the 2,000 companies of NSE. Learn about each of these companies. See, each of these companies is doing well. And then you can say that if majority of these companies are doing well, you can say that NSE is doing well. Right? You can do that. But do you think that is an efficient way of doing it? Absolutely not, right? Maybe every 30 minutes you would love to know how the stock market is doing, or every day you need to know how the stock market is doing. So every day you'll have to go to each of these 2,000 companies, do a study about them and understand if they are doing well. Only then you will be able to say that if NSE is doing well or bad. So it is really inefficient. Just like that, it was inefficient to go into each of innings of Virat Kohli to understand his performance. So what helps here? What if there is a single number which will indicate the performance of NSE? What if there is a single number which will indicate the performance of BSE? That exactly is what a stock market index does. Now, again, making things really clear for you, a stock market index is a number which tells how the stock market of that country is performing. Now, when we know how the stock market of that country is performing, if it is doing well, we can say that the economy is doing well. If that is doing bad, we can say that the economy is doing bad. I hope you really understand this. If that's the case, then let's move ahead into the next segment. So now let's get into the crux of the topic. What is Nifty 50? What is Sensex? If you've understood so far, then it is as simple as Nifty 50 is the index of NSE. Sensex is the index of BSE. It's as simple as that. So Nifty 50 is a single number. It is somewhere around 17,000 now. So 17,000 is a number which indicates the performance of NSE. If this goes up, if 17,000, if Nifty 50 goes up from 17,000 to a higher number, we can say that NSE is doing well, which means that the companies in NSE is doing well. And if Nifty 50, the number from 17,000, if it goes down, we can say that the companies in NSE is doing bad, which in turn we can say that NSE, the stock market itself, is going through a bad phase right now. In fact, I'll even give you a better, easier example to understand this, which is in 2020, unfortunately, COVID hit the country and all the businesses had to go into lockdown. There was nothing going around in the economy, which means that the economy was doing bad. And what happened to NSE? So if the economy is doing bad, as I said earlier, the stock market will do bad. So which means that NSE was in a bad situation, and that was indicated by Nifty 50. So Nifty 50 before COVID hit the country was at around 12,000. After COVID hit the country, it crashed to near 7,000 regions. It came down so much, which indicated that stock markets are doing bad, which means that companies are doing bad, which means that the economy is doing bad. And then after lockdowns eased, the economy started getting back up. Companies started functional again, and then the economy was getting better, and we saw Nifty also moving up. Nifty moved up from 7,000 ranges to nearly 18,000, which indicates that the stock market started to perform well. So again, coming to my point, which says that Nifty 50 is a single number which indicates how NSE is performing. Nifty 50 is the index of NSE. Just like that, Sensex is the index of BSE. So the next question in your mind will be, how was Nifty 50 calculated? How was Sensex calculated? Right. So in order to understand that, we'll have to revisit the Virat Kohli average calculation. How did we get to the average thing? We looked into all of Virat Kohli's innings, how much runs he scored, and then we arrived at the average number. But it is not the same case in the world of stock market. Let's take the example of Nifty 50. So as the name suggests, Nifty 50 comprises of the performance of the top 50 companies in NSE. Now you might ask me, hey Sharik, why not all of the 2000 companies? Why don't we take numbers from all of these 2000 companies and then reach at a single number, which is Nifty 50? No. So the logic behind that is there are 2000 companies, right? And out of these 2000 companies, there are like really large, huge, the largest corporations in the country. There are medium-sized companies, and then there are a lot of small-sized companies as well. So why do we have to look into the performance of all these companies, which includes a lot of small companies? Not really necessary, right? So the logic is, let us only look into the top 50 largest companies in India. If they are doing well, it will obviously mean that the stock market and the economy is doing well. If those top 50 largest corporations in the country, if they are doing bad, then it obviously means that the economy and the stock market is doing bad. So going by that logic, it's not necessary to include all those chota small companies into the calculation. What is necessary is the top companies in the country. That is why Nifty 50 takes into consideration the top 50 companies in India, and then it arrives into that single number, which is the index, which is what we discussed earlier. Now, when we speak about Sensex only takes into consideration the top 30 companies in BSE. and then it does a complex mathematical formula, and then it arrives at the number which Sensex is. Now you might have two doubts here. How do they select the top companies in India? So in order to understand the top companies in India or top companies in NSE, you have to understand certain terms like market capitalization and free float market capitalization. Now, do you know them? So in this learning series going ahead, I will be teaching you what market capitalization is, what free float market capitalization is. So I think you should probably understand more only then. As of now, only understand that Nifty 50 is index of NSE and it contains the top 50 companies in NSE, and Sensex contains the top 30 companies in BSE. I don't really want you to get into the complex understanding of how do they select the top 50 companies. After selecting the 50 companies, now what is the mathematical formula behind calculating the number that Nifty is today, which is 70,000. Let's not get into all of those now. It is definitely a topic for another video. When I get time, when we are done with the basic learning, I'll definitely do that. Now, before moving ahead, I thought I'll actually dive deep into Nifty 50 and show you the 50 constituent companies in Nifty 50. Okay, so let's go into market feed application to see that. Now, we are in the market section inside market feed application, and under Indian indices, I hope you see Nifty 50. I hope you also see global indices here. So going into global indices, you see US markets, European markets, and also Asian markets. So it's very obvious and evident that all of the stock markets across the world, they need indices which will indicate how that country's stock market is performing. Correct? Now let's get back into Indian indices and let's click on Nifty 50. So clicking on Nifty 50, coming down, you can see all these companies that you see here on the screen. Adani Ports, Asian Paint, Axis Bank, Bajaj Auto, all of these companies are the 50 companies which are the constituents of Nifty 50 today. Now again, as I said, there is a logic behind selecting these top 50 companies. Now, if a company goes out of the selection criteria, that company will be removed from Nifty 50, and the new company which fits into the selection criteria, that company will be intelligently added into Nifty 50. And all of this work is done by the NSE. Now that you clearly understand what an index is, you also understand what Nifty 50 is, what Sensex is, the next job is to understand is the application of an index. The first application or the use of an index is something that we've been discussing so far. Exactly what we've been discussing so far. That is, an index will indicate how a stock market is performing, and how a stock market is performing will in turn indicate how the economy of the country is performing. Right? So the first application or use, we can tell that an index is absolutely useful in telling how the stock market of a country is performing, and that will tell how the economy of a country is performing. The second application or use is that an index is used as a benchmark for judging long-term investment portfolio. Again, this is super important, very important for you as a long-term investor. This is something you'll be practically using throughout your stock market participating journey. Very important to understand. Now, in order to understand this, I hope again you have watched that video that we've done already, where we already talk about benchmarks. It is very important to have benchmarks in the market with which we can compare our personal investment portfolio. Now, okay, let me make this very clear. Nifty 50, right? Nifty 50, every year, almost we could say that over the last 15 years, every year, it has given a CAGR of compounded annual growth rate of 14%. Now, nearly 14%. Now, don't be worried by hearing the term CAGR, compounded annual growth rate. Just think that it has given a returns of nearly 14%, nearly 14% every year. Now, this can be taken, or this is taken as a benchmark in the industry. Now, if you have also been investing into a portfolio of stocks or a portfolio of mutual fund for the last 10 or 15 years, but your investment portfolio has only given say 12%, then it's said that you have not hit the benchmark, because Nifty 50 itself gave 14% returns. So you could have only put your money into all the 50 stocks in Nifty 50. You could have easily made that 14%. But no, you went the other route. You decided to invest into multiple stocks of your choice. You went and invested into mutual funds, and you could not even match the benchmark. You performed even lesser than the benchmark, which means that you did not perform really well. Right? Now, the aim of someone who is investing in the market, the minimum aim should be to match the market. which is matching the benchmark. That is, every year you look at how Nifty did, and you also look at how your long-term investment portfolio did. If your long-term investment portfolio gave the same returns as that of Nifty, well and good. Now, what is the aim? What is the goal? The goal is to beat the benchmark, or we can say beat the market. So every year when you are investing for the long term, you should look at how much Nifty 50 gave as returns that year. And if your long term investment portfolio gave better than that, then you are a successful investor. What do you understand here? Benchmark for comparing, for understanding your performance in long-term investment in the market is Nifty 50. So far, I hope all of you have understood everything that is there to Nifty 50 and Sensex. Everything is clear, right? But now I have a question for you. If you look into Nifty 50 and you see that Nifty 50 is moving up, we can definitely say that the overall stock market is doing well and the overall economy is doing well. But we also know that for a fact that NSE has different sectors of companies in it. There are IT companies, there are FMCG companies, there are pharma companies, there are banking companies, right? There are multiple different sectors within NSE. There are multiple sectors within BSE as well. Now, if you just look into a single number, that number might say that stock market is doing well. But what if, when the overall stock market is doing well, what if pharma sector is not doing well? How will we know that? Do you understand where I'm going? So we also need single numbers which will indicate how individual sectors are doing, which means that we need sectoral indices, and we do have sectoral indices in the stock market. So when we speak about NSE, we have Nifty IT, which is a sectoral index, which is a single number which will indicate how the IT sector is performing. It will have the top companies from the IT sector in it. Then we have Nifty Bank. Very important index, right? Nifty Bank has the top banks in the country, and Nifty Bank is a single number which will indicate how the banking sector is doing in the country. Just like that, we have Nifty Pharma, Nifty FMCG, Nifty Realty, Nifty Media, and the sorts. Now, in order to get more clarity, let's come to Market Feed app again, where we can see sectoral indices here as well. We can see Nifty Bank, Nifty Auto, Nifty FinServ, Nifty FMCG, Nifty IT, which we discussed. So let's click on Nifty IT. And see, these are the constituents of Nifty IT. All the IT stocks are not there, but top IT stocks are there as part of Nifty IT. So these are the different stocks in Nifty IT. Just like that, we can go back, say, probably we can click on Nifty Bank. And these are the constituents of Nifty Bank. So sectoral indices are just numbers, but just by looking at those numbers, we can understand how that sector inside the stock market is doing. So just like NSE has sectoral indices, BSE also has sectoral indices to show how the different sectors in BSE is doing. So yeah, that is all there is to this video. So you came into this video probably hearing about Nifty and Sensex somewhere. Now you have real clarity, absolute clarity on what these are. So these are very basic terms when it comes to the world of stock market. So very important to know this in the beginning as well. So moving ahead, a lot more complex concepts are coming your way. So in case you have understood everything about what an index is, what Nifty 50 is, what Sensex is, then make sure that you hit the like button. And I see a lot of people haven't subscribed yet, so make sure that you subscribe to the channel as well. And if you haven't joined our exclusive community on Market Feed app, a link to join the community is also available down there. Make sure you jump into the community, talk to others in the community. Even I am waiting for you there. So that is there. Also make use of the comment section. Now I see the comment section as a doubt clearing place. So you can go there. If you have any doubt related to the video, make sure you ask your doubts there. Either me or my team will make sure that we give clarity to your questions there, right? And also, as I always tell, this is not just a learning program that we are doing here. We are building India's best stock market community here, right? So invite your friends,